Hi, this is Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. And we broke above the downtrend line from the all-time high. So we're going to talk about that later. But right now, we're going to talk about funky hyperwaves. And Tyler, I'll let you get right into it.
Great. Thank you very much, Leah. We had a little bit of technical difficulty, but we are up and going right now. Thank you for listening. I think you're going to find this a fascinating review of Hyperwave from the perspective that there are some exceptions with Hyperwaves. And you good listeners and followers have found a number of them, and you've asked me a number of questions about why is this hyperwave doing this and that one is doing that. So what we're going to talk about is something that I wanted to talk about maybe 2 weeks from now, after everybody really understood what a hyperwave is and was. But I think you are all ready to take the next step. We'll go from freshman year to sophomore year here, and we will take a look at funky hyperwaves. And the way we will do that is by quickly doing a screen share, and we will look at a chart that you have seen many times before, which is on Bitcoin Wisdom, and I am going to switch to the hyperwave of Bitcoin. You will notice here, when compared with this, which is our model or our archetype hyperwave, that there is great similarity. Although we are not sure what this is yet. So what I've done on this chart is I've shown the 3 first phases of a hyperwave. This is the first one, and I mentioned the other day it runs to infinity. This is the next one, which begins at a finite point, but then runs to infinity. And that's phase 2, and this is phase 3. We broke down through phase 3 on the week of February the 4th. If we had closed below phase 3, either the hyperwave would be finished and we would drop all the way down back below about $800, or we would drop down to phase 2, which would tell us we were still in the phase 2 of a hyperwave. Now that sounds a little bit confusing, I'm sure, but it should be less confusing when I show you this first funky hyperwave of the Bitcoin Investment Trust, GBTC. You've seen this chart before, and you know that my interpretation of this chart is that this, going for 2.5 years, was a phase 1, and we began a phase 2 that is still valid as of today. So how could 2 hyperwaves that are both based on the same asset, Bitcoin, be in 2 different phases? My answer is simple, because of the difference between GBTC and Bitcoin. And the difference between the two is that this is a rendition of a pure asset, Bitcoin, on one particular exchange, Bitstamp. We could show another overlaying chart of the same asset, Bitcoin, on another exchange like Bitfinex, or another exchange like Coinbase, or another exchange. like BitMEX, and they would be almost identical, but not identical. The difference between this chart and the GBTC chart is GBTC can trade at a discount or a premium to the actual asset Bitcoin. Therefore, it is not unreasonable to expect that they might be in two different phases. But it gives us a clue why we could drop through the phase 3 line on Bitcoin and come down to the phase 2 line where GBTC is already sitting. So that's my first example of an exception or something funky or unusual about what should be a very standardized model. I'm going to show you several others because you sent them to me. I had someone ask about Amazon, and then I had someone ask about Netflix, and then I had someone ask about Tesla. And in each case, the question was, is this in a hyperwave? So let's take a look at them. Here is Amazon stock on a weekly base. To me, I don't even have to draw in the lines. When I see the chart, what I told the listener was, bingo, you found it. This is clearly a hyperwave. So then the question becomes, where is it in its phase? And it's very difficult for me not to see that we're in phase 4. Why? Because I believe this is phase 1, coming in right around the $100 mark. But there's something funky about that interpretation, and I'll get to that in a minute. The next move is phase 2, which meets all the requirements. Number 1, it's a breakout above phase 1. Number 2, it moves at an angle higher than the previous phase. And number 3, there are a number of touch points along this line. So phase 2 is very clear to me. Then we have what to me is a very clear phase 3 that starts in the beginning of 2016 and runs all the way up until approximately October of 2017. But this is also a little funky and was pointed out by Tone Vase on his show when we asked him if he could try to determine if Amazon was in a hyperwave, and he nailed it exactly. But he paused right here, because one of the rules in the hyperwave construction is that you can never get a weekly close below a phase line, or that phase line is not valid. But there clearly was a close right here in the beginning of 2016, slightly below that line. So that makes this chart a little funky. Then we have this tremendous acceleration, which I believe to be phase 4. And if anybody remembers, phase 4 is that part of the hyperwave that goes almost vertical, but it also means the end of the hyperwave. This is where all the money is made. in terms of a short period of time, the amplitude of the move. You can make a lot of money down here. The problem is the probabilities of moving from a 1 to a 2 to a 3 to a 4. If any of you have heard this before, you know I give you general outlines that only 1 out of 1,000 securities or commodities or indexes in phase 1 will ever make it through a hyperwave.
Tyler,
Yes.
we have an interesting question.
Please.
Do you see the formation of a hyperwave as good or bad, or simply a formation? And can you, as you're going through those, elaborate how that is used in your trading style, and therefore, you know,
Absolutely.
potentially not just binary, but if you could elaborate on it.
Absolutely. Hyperwaves are not good or bad. They are just things. They're things that occur at very important times in history and do not occur in general at times that are not very important. How you use them is up to you. I will show you how I use them as a money manager and how I think most of you might be interested in using them. You can make a lot of money as a trader if you know something is in a hyperwave, because you know that each of these angles is going to get higher and higher, and you know exactly where your stop points are on all 3 of these, which is the line itself, because the price is always going to be above these lines all the way until you get to 5, and then it's going to be below the line. I've seen people make a lot of money on 5, knowing that 4 was about to penetrate, the price would penetrate 4, and you would get this tremendous drop in a short period of time, and they are licking their chops just waiting to short it. I've seen a lot of people that have used hyperwave missing the 4 and the 5, but knowing that a 6 is going to come. So rather than panicking and selling out, they stay in, and then they begin to get out of their positions as 6 develops. But the most money is made in a hyperwave in 7. Number 1, in terms of opportunity cost, by making sure you're not anywhere around this thing, or by being short, or by hedging other positions by using this as the short side of a hedge. So there's a lot of ways to use hyperwave. But getting back to our funky Amazon, if you remember the basic numbers, 1 out of 1,000 below a phase 1 line is going to become a hyperwave. 1 out of 4 in phase 2 will go on to complete a hyperwave. 85% of those in a phase 3 are going to complete a hyperwave. And I've never seen a phase 4 following 1, 2, and 3 in which that security, that commodity, that index did not go on to complete 4, 5, 6, and 7. 0 times. I hope somebody finds one. I have never seen one. So what am I saying? I'm saying that this is a gift from the heavens, because show me another pattern in all of technical analysis that tells you every time a change is made, the probability of something else happening goes up, not down. The probability here is minuscule. The probability here, a lot of people bet money based on a 1 in 4 probability. But when you make this move from 2 to 3, and you see this acceleration up, you've just increased the odds approximately to 85 out of 100 that you know where this is going, and you can stay long. And as you move away up from that line, you can take profits knowing that you've got to stop right here. And again, you can get back in when it bounces off the stop. And as you approach that line, you know you can lighten up on your position, waiting to see if it's going to hold on a weekly basis. And if it does, you can go completely back in on the long side, knowing that you're about to enter with 85 out of 100% probability, an 85% probability that you are about to start even a bigger move that's going to go vertical. So here on Amazon, the fact that we've had a couple of strange things like this break, which immediately jumped back above, would probably have caused me, if I was in Amazon, to sell the position when we broke on a weekly basis and to buy it immediately back when we close back above the line. But other than this one strange piece of it, this looks like almost a non-funky hyperwave to me, with at least 4 more runs to go. The 4th all the way up, wherever it's going to go, the 5th down, the 6th back up, and the 7th all the way back down to below 100. Now, don't ask me what in the world it would take for this thing to do that. All those S-curvers that are saying that many hyperwaves, including Bitcoin, are simply going to go into a big S formation when adoption is complete and keep running basically horizontal for years and years to come. Very possible. I'm not going to argue with that. All I'm saying is this is a hyperwave, and this is telling me that it's going to go through 7 phases, and we are in number 4. Now, are we in number 4? Extend the number 3 line out here and have this price drop down through this 4 line, which I would not consider a solid line at this point because there's only 1 point on it. If we come back down and give us a 2nd point on this line, go back up and give us a 3rd point on that line, this is a very valid line. Each touch makes it more valid. We've only got 1 touch right here. What that tells me is we're probably still in a phase 3. If you extend this line, I wouldn't be at all upset if this drops down to the phase 3 line. It'll just give us another point on the phase 3. So you don't want to anticipate the strength of a move within a phase until you get multiple points, as we did here and here and many, many points below over here. Okay, so that's the next thing you really need to know. You can't simply blindly go by, all right, this looks like it's going up, therefore it's a 2. This is going up, it's a 3. We know that by looking at Bitcoin, because on Bitcoin, or on the GBTC, we know we're only in a phase 2, and we could drop all the way back down to that line and still be in a phase 2, or we could accelerate up from here into a phase 3. Okay.
Tyler,
Yes.
I think we've got a very interesting question, especially since we're talking all the way to 7 today. And the question is, how probable and often do hyperwaves restart after completing their full formation?
Almost never. Almost never, meaning maybe 10 examples out of 300. So we're talking about what, 3% approximately. But they do happen repeatedly. Silver's done it on 2 different occasions, possibly a 3rd. Gold has done it a couple of times. Sugar did it twice in the 70s, but don't expect it. The problem with hyperwaves from an emotional point of view, if you think about them too much, is wow, this is going to be fun. We can ride this thing up for years, which is true. Look how long you could be riding Netflix and still only be in a phase 3, maybe into a phase 4 years. We broke out above phase 1 in 2013. Here we are 5 years later, and it's still skyrocketing. You could have stayed in this thing for the last 5 years and not worried about Netflix, regardless of what was going on with the NASDAQ or the stock market or anything else. It can give you a tremendous amount of confidence. But this is my second example of a funky general hyperwave. Now, remember, when I'm saying funky, I'm talking about the difference between all of these that I've shown you before that are really pure. They do exactly what you would expect them to do. Go through the full 1, 2, 3, 4, 5, 6, 7, right back down to the beginning, over and over again. Hundreds of examples of them. And then you got the funky ones. And thank you to the readers for pointing out 3 of them in a 1-week period of time. So on Netflix, here's what's funky about Netflix. 2010 to 2012. We were in a very clear phase 1 from well before 2003 all the way to 2010. Then we began what I thought in 2010 was a phase 2, very clear. It broke up above the phase 1, moved this phase 1 line all the way down to about $5. It's sitting at 20, about 18 right now, the way I've got it drawn. But mentally, just bring that down, and you'll see that it was a wonderful phase 1 in which all this price for years and years and years in Netflix stayed below it, stayed below what is now would be $5 a share. But then in 2010, it broke out, and it ran all the way up to 40. From 5, an 8x, almost like its own hyperwave. But then it dropped all the way back down below that phase 1 line again. In fact, below the lower phase 1 line, down around $5. So that makes this funky, but it does not discredit hyperwave in any way. Because what just happened here is we had not yet really formed a valid phase 2 by going up. What is the percentage of time in a phase 2 that it will become a full hyperwave? 25%, 1 out of 4. You are looking at one of the examples in which it broke out into a phase 2 and was 3 of the 4 that never makes it into a hyperwave. And what it did is drop all the way back down and continued into what I now believe is a valid phase 1 at the $20 mark, $18 mark, as opposed to down at the 5. And so far, that has turned out to be correct. What do I mean by that? Because then we started this phase 2 up, and then we've accelerated into this phase 3, and we might still be in a phase 3, or this could be a phase 4 like Amazon. We don't know that because there's no touch points to draw in a line. On Amazon, I drew in the line for you because it looks like that's a possibility because of this one correction that came over to the line. I would bet, though, that Amazon is wrong and Netflix is correct, which is we are still in a phase 3 where this line will come up to 240 or so. and we'll get a correction down into that line, and we'll still be in a phase 3. You can't project it. You can't try to pretend you know what's going to happen. And you don't need to with this system. You can simply ride it anywhere it wants to go, just keeping in mind what the rules are about breaking a line once it's established. We've already looked at this one, but I thought I'd bring it up again because to me it's funky. Funky in this sense means perverted. Perverted in this sense, the real definition of perversion is differing from the norm. And that's what these 4 or 5 examples are that I'm showing you. And then I'm going to show you one other one very quickly. Just so you understand, I am not here proselytizing that for some reason this magic 7-phase thing always works exactly the way all the other ones have. There are things you must consider with any technical system, including this one. Okay, this is Tesla going back to the formation of the company. It began in a phase 1 right from day one, sort of like Bitcoin. Bitcoin's been around for 10 years, and from day one, my interpretation is it was in a phase 1. It looked pretty good to those early adopters that saw it go from 10 cents up to $1,000, or 10 cents up to $500, or if you got in at $100 up to $1,000, or if you were late and bought the dip back to 150 or 200. All of those seem like very huge moves, and they were. But the way I look at this phase 1 line keeps all of the price action in its first 3 years under this Tesla chart. That to me is a valid phase 1. Phase 2 is the funky part. Because as was the case in Amazon, and as was the case in Netflix, some funny things happened. I don't like the fact that on Netflix, we really only have one touch point in the phase 2. If you had owned this from phase 1 to phase 2, you would have gotten nervous as it was coming down, because this could have been a phase 2 line here. And you would have thought, oh my gosh, we just broke the phase 2 line as we did back here, and now it's going all the way back down to the beginning. It didn't do that. It ran back to a higher high and then came down and established the true angle of the phase 2 line. But I would have liked to have seen several other touch points before it accelerated up into a phase 3. I can draw a line from here through this bottom, circle this bottom as the outlier, and then take in all of these points for a valid 2 and begin the 3 at this point up. But now what I'm doing is I'm messing with the charts after the fact. I would rather say that at times, as you get close to decision making on where you are, it does not hurt you to step aside and wait for more evidence. Particularly if you say, okay, this is one of a rare number of hyperwaves that's going to act funky on me. I can still make a ton of money off of it, but I've got to be careful with this one. That's what I believe is the right way to look at Amazon, Netflix, and Tesla. Tesla, because if you drew the phase 2 line here, which would have been absolutely accurate, except for one thing. That's too sharp of an angle for a phase 2. Phase 2 should always be well below 45 degrees. I would have drawn it at the time, but I would have wondered, why is it going up so steeply? And sure enough, after 3 touches, 1, 2, 3, it would have been a valid line that was then broken. And that told you that this is 3 out of the 4 that aren't going to make it from a phase 2. Only 1 out of 4 is, and this one didn't. But now this one turned around and surprised us by going back up, didn't really close at a new high, and came all the way back down and formed a possible second angle of a phase 2, as opposed to dropping all the way back down to the bottom. Went back up, came back down, and gave us a second touch point, which also happened to possibly be the beginning of phase 3. I would not argue that we are not still in a phase 2. And we've only had one touch point here, or if you want to say we had 1, 2, 3 touch points here, then we broke down. Rather than go through all of that permutations, I would rather look at this as a continuation of phase 2. And if price goes up from here, we could then call it a phase 3, particularly if it comes back and touches. If it goes down from here, the probability of holding this phase 2 is much greater. The longer you can stay in a phase, the more valid it becomes. Okay, one other one, and I just want you to look at this for a second and try to figure out why I consider this funky. This is RCA, Radio Company of America, back in the 1920s. Looks very similar to many of these other charts we looked at. Columbia Gas, International Harvester. This one, I believe, is Westinghouse Electric. This is Otis Elevator. This one's IBM. Okay, they're all fairly clean in my mind. So what's wrong with this one? Well, here we got a phase 1 going over here that happened to go back to 1923, 1922. So I know that you had a very long period of time of a flatness. So that's good. You begin to come up here, which could be a phase 2, but it didn't last very long. Then you got this acceleration up. So maybe that was really a phase 2 or phase 3. Then you went up very sharply. That was probably a phase 4. But the thing I don't like about this chart, even though it's clearly a hyperwave, it would have been very difficult to play. On all of these charts I'm showing you from the 1920s, these are all monthly charts. They're not weekly charts. And a monthly chart's very difficult to read because each bar is obviously a full month long, as opposed to 4 weekly candles or 4 weekly lines where you can get much more precise, or daily lines, even more precise.
Tyler?
Yeah, Leah.
Interjecting with a question that I thought was really good from the audience.
Good.
As you explain this one, which is, especially because they're a little funky, right? Which is specifically, and thanks guys, how do you determine graph length and height to confirm the angle?
Do that again, ask that again.
Sure. So will the angle change based on your time scale? How do you determine graph length and height when you're confirming these angles, the different phases? And since these are funky, I just think that, that would be helpful to explain both, if, as you go.
Yeah.
If possible.
Anything that varies from this basic setup, knowing that these are years. These are not days, weeks, or months across the bottom. Remember that we talked about, excuse me, we talked about this chart before. This chart starts in 1942 and it goes until today. It's one hyperwave. It's the biggest I've ever seen in terms of the length of time, that it went from a bottom up through all the phases, 2, 3, 4, 5, 6, 7, all the way down to today to get back to the beginning. But this thing was 75 years long. So a hyperwave, depending on what it means for the world financial situation, can vary in length. The more impact it has, the longer it can take place. But in no instance is a hyperwave, can you have a hyperwave in a 1-year period ever? You cannot have a hyperwave in a 2 or 3-year period ever. Hyperwaves last for years. So if I had to put an average on it, I would say 4 to 5 years in phase 1, 1 to 2 years in phase 2, 1 year in phase 3, and probably 6 months to a year in phase 4. Phase 5 is usually over within a matter of short months. Phase 6 is over in usually a matter of short months. And phase 7 can go on for years. In the case of the Japanese Nikkei index, which peaked in 1989, the Japanese market fell for the next 20 years and ended up where it is today, still between 40 and 50% lower than it was at its peak. Why? Because that was such a massive, important economic event in world history. And you can look up the details of what actually happened to that country during the 20 years leading up to December of 1989, where the peak in the market took place. And if you're not familiar with what happened since then, you will be amazed. It's almost as powerful as this, which is the US Treasury bond yields over an enormous period of time. Okay, so it's a great question, but unfortunately the answer is it depends, but it's not open-ended. We're talking about massive moves that take place over many years. I cannot give you specifics other than averages on the angles of these, other than to tell you that 4 can never be 180 degrees. It cannot go straight up because the time along the bottom means the highest angle you can get approaches infinity. But on all the other ones, general rules are less than 45 degrees on 2, more than 45 degrees on 3, and then anywhere all the way up to a vertical line. I think I showed you one right there. Westinghouse Electric went vertical for 4 months into its peak, where the final line went literally straight up, and then phase 5 went literally straight down into a 6, and then a very short period of 2 years to get to the bottom. So each one is different, but don't let the differential between them scare you off in terms of what this thing is telling you as an investor, in terms of being sure that you are in 2, 3, and 4, and maybe 6, depending how much confidence you have and how much time you have on your hands to follow what you're doing. 2, 3, and 4, you don't need to watch. I don't mean to be flippant, but I'm serious. 2, 3, and 4, once you are in them, you've got a couple of years ahead of you where you can forget about this because the money is going to continue to roll in. As 4 goes on, you've got to start getting nervous that you're getting close to 5. As 6 goes on, you've got to start getting nervous that at some point you're going to be close to 7. So there are critical apexes at which you've got to make decisions. So I hope I answered that as best I could. Going back to this chart, the thing that bugs me about this chart, it's the only one I've ever seen in which we've got a double top. 4s are not supposed to do that. I would have interpreted this drop as 5, and then I would probably have tried to play this as 6, and then I would have gotten nervous as this went up, and I wouldn't know what to do, because you never, on any of the other 320 some I've looked at, I've never seen us get back up to the top. I've never seen us go over the first top. So I would interpret this as the real top. But then I can't really explain where 4 is. So this is funky to me. And I'll put it in the funky file along with a half dozen other ones, half of which you folks picked out. Congratulations. You made me talk about it before I wanted to. But in any case, I wanted to show you one other funny little chart that has nothing to do with hyperwaves, but it's a way of understanding how I look at this small family of 300 or so examples of these very powerful moves that take place sometimes in the markets. And that has to do with averages. This is a chart from January of 1997 through December of last year. So it runs for 20 years. And this is the consumer price index, basically broken down into various components. This midline here is the average increase in inflation over this 20-year period. It comes out to be 55.6% total. So that's what gets us down to the 2% kind of number that people talk about in inflation. But the average or the mean or the median of anything is in a lot of ways just a ridiculous number, as this chart clearly shows, because housing, wages, childcare, medical care services, college tuition, college textbooks, and hospital services all were up between 100 and 200%, while the average was 55. And new cars, household furnishings, clothing, cell phone services, software, and television sets were down between 10 and 100%, 50%. So the average of anything, the average of this, which is a model of all the averages of hyperwaves that I've looked at, gives you a good sense of, if you throw a dart, what will probably happen. But you can and often will, no, I'll take that back. You can and sometimes will find deviations away from the archetype. Don't let those scare you. In each of the ones I've shown you, they actually turned out to be hyperwaves. But you had to go through a few weeks, or in a couple of cases, a few months of being patient to see how it played out before you tried to draw conclusions. So very shortly, we will finish this. I'm so grateful for those that sent those rather unusual hyperwaves into me. A lot of you might very well be playing them for other reasons, but now you can consider this tool as a way of helping you out as you enter or exit positions in those particular assets. Back to Bitcoin.
Tyler.
Yeah, please.
So one question before you go to the price action today of Bitcoin, another great question that we received, I'll read it verbatim. With the increased volatility and movement of the crypto market, a month in crypto is like a year in the stock market, correct? Does that affect the time frames of a crypto hyperwave?
Absolutely, and great question. And the reason Leah and I have entered this space, uh, I think this has got the potential of being the biggest hyperwave ever, because I believe that hyperwaves only occur when something massive is shifting on a global basis. Well, Tyler, how can you say that? We just looked at 3 companies. Yeah, they're interesting companies. They're growing very quickly. But step back and think about it. What is Amazon doing to change the world? I don't have to answer that. You know the answer to it. What is Netflix doing to change one of the biggest sectors in economics, which is media? You can answer that. What is Tesla doing in terms of energy, in terms of possibly space, in terms of possibly cars? Each one of the hyperwaves I've looked at represent something much bigger than that particular security or commodity. When gold went into a hyperwave, it's because we were getting out of a reserve system of currency and entering a world that we are now plagued with fiat money. That's why gold went up. That's why silver went up. It didn't go up simply because of the supply and demand of silver. Obviously, that's what moves price, but there's something much bigger behind it. All of the charts from the 1920s represent the period between World War I and World War II, represent hyperinflation in Germany in the early 20s, represent the roaring 20s and the changing of ethics and morals and prohibition. There's so much more in the movements of these prices that needs to be taken into consideration. Back to Bitcoin. The question about is this changing, is the cryptocurrency ecosystem and Bitcoin in particular, and the movement that we've seen over 10 years, and the price amplitude that we've seen that have blown away, in my opinion, even the most fervent Bitcoin believers. Tone Vays is unapologetic about the fact that he thought 7,500 was going to be the high last year. And he's got these incredible tools for making that statement. And we ended up at 20,000. And the difference between those two numbers occurred in a little over 30 days. This is the most powerful price movement that I have seen in any asset class I have ever studied. Now, does that mean it's going to do all these huge things? Why guess on the answer to that? Simply know that there are tools available that if this wants to go to 20,000, 50,000, 100,000, a million, $10 million, that it will be part of a much bigger story where evidence will come out in the form of fiat currencies, the gold market, the stock markets around the world. So you don't have to guess or speculate. I've given you a framework within which you can take small decisions, add them together, and see if they add up. And if they continue to add up, you can continue to take advantage of them. Okay, with that, thank you so much for listening to all of that. I wanted to go into 4, 5, 6, and 7 today. We will do that separately. I wanted to focus on funky hyperwaves or perverted hyperwaves. They are still hyperwaves, but I wanted you to know that don't expect a cookie cutter. That is not what this is. I sent out a tweet this morning, which I thought as soon as I sent it out that I could end up regretting it, because I don't like to assume what's about to happen with a market. It's not a wise way to proceed. However, there was growing evidence in my mind that we, for the first time since December 16th of last year, where we hit 19,666, we could not close above this line on this big move up from the bottom. We could not close above the line here just about 2 weeks ago. And I thought this morning that I had the evidence that we were going to break that line and close above it. We did it on a 6-hour chart earlier today, right here, for a full candle. We came all the way up to, unfortunately, my magic line at 11,100, and we've been turned down again from that 11.1. Too early to call this one because we need a daily close above that line. We've only got a 6-hour close above it. The 12-hour has stayed above it so far. So I'm still optimistic. And we've got a lot of time to go. We are building steam. We cut through earlier today the 50-day moving average right here, this blue line. We finally got above it. We need to close above it on a daily basis, but slowly we are eating our way through a lot of overhead resistance. I will not be satisfied that we are out of the woods until we close above 10,100, check. The downtrend line may be check. We will know later today. The 11,100 line and this peak at 11,797. Once we've done all of those things and we're sitting up here somewhere, we can, those that are bullish can breathe a little bit of a sigh of relief, because potentially then any pullback will find good support down in this area before moving higher. I called it the first step this morning. I still believe that we are taking that first step, but we'll wait until the close tonight on a daily basis to see exactly where we stand. But right now it's looking pretty darn good. And we've got some momentum behind us. Thank you very much. I didn't mean to take this much time, but some great questions, and keep the questions coming. We've got some time for a couple of others. If I'm going to go off screen share and see if Leah's got some other things that might be helpful that will help answer some questions.
All right. Good that we have a little time. So actually, Tyler, you got a good deal of questions coming in on GBTC.
Great.
And very good ones. Thanks, guys, again, for sending through. To start with, a little bit more information, if you could talk about what you believe happened and is happening with GBTC when the stock split.
Yeah, that's just very simple. the same as any stock split. It's a big one, 90 to 1, basically. Usually a stock split, is 2 to 1, 5 to 1, 10 to 1. It's just a means of getting the price down to a price level where more people can afford it. The problem with GBTC in retirement accounts was that it got up to over $3,000 per share. To buy one share cost you $3,000. If you had $2,000 in an IRA, you couldn't buy a share. You can buy pieces of Bitcoins. You could buy a tenth of a Bitcoin, a hundredth of a Bitcoin, a thousandth, a 10,000. You can't do that with GBTC. You got to buy one share. And if you buy one share when it started out, at $50 or $100 or $200 or $1,000, okay. But when it got up to $1,500, $2,000, $3,000, it was silly. So they split it. They split it 90 to 1. For every share you had, you got 90 more. Does not change a penny of the value of your account. You just have a whole lot more shares at a very low price. I believe it actually increases slightly the demand function, because I do believe that people that didn't want to put $1,000 into one share of something would be willing to put in $9 into something and buy 50 shares for $450. Believe me, it did not change anything in the economics of the situation. It just made a lot.
Tyler, we lost your audio there for a second. Still lost your audio. Live chat buddies, can you hear the audio? I don't hear anything, Tyler. Yeah, mic is Tyler, your mic's muted. So maybe, guys, I think that's maybe where we cut it for today. I got the rest of your questions noted, especially the one about speaking about traditional markets and how Bitcoin is potentially inverse related, but we'll see what Tyler has to say about that. And then also the comment, Grayscale's digital large cap fund, any other you send through. We'll definitely talk more about GBTC. It is definitely a complicated security, although, and you see my pup in the background. But, with potential ETFs still down the pipeline and potentially other securities coming through, there's a lot of interesting stuff that Tyler's going to talk about, and that you have the opportunity to look at. So with that said, I think we're gonna sign off here. Tyler, you want to wave? All right, awesome. Keep sending through questions below. Also, our Twitter accounts. Tyler is fantastic at getting back on his Twitter to questions. So keep sending them through, and tomorrow we'll have another. And thanks again, guys, just for joining us. It's a fun adventure, mostly, also because we're in it with you. So thanks.